Hello, everyone. Welcome to another edition of Tip Tuesday. Jeffrey Nance here with you. Today's topic is on AI and its impact on you as a stock trader. Probably a topic most of us have not spent a whole lot of time really thinking about or certainly studying, but it probably will impact us to some degree as we move forward in our trading journeys. So, the idea here with artificial intelligence is that we can use robots, if you will, to essentially go out there and pick stocks. And then, of course, the thought, at least on our perspective, is, well, is a robot going to pick stocks better than me? So, I started doing some research on the topic. And as I was working my way through these various topics, I noticed several things. And so I thought I would share those with you guys today. So when it comes to data analysis and insights, AI can rapidly analyze extensive historical data and identify patterns that human traders overlook or outright miss. Manual analysis is necessarily limited by the volume of data a human can process and how much time an analyst has at their disposal. All right, so obviously a computer can take more information in a shorter period of time and do something with it. So, might a computer find some particular stocks that meet certain criteria that I may not find? And the answer to that is, well, of course. All right. So, how can I kind of get around this as an individual trader? Okay, well, there's a couple of things that we can do very obviously. One is we can take tools that are already available to us. We can use things that the computers are already doing. We can set up screeners or we can run scans, however you want to do that, to find certain stocks that meet certain criteria. And there's a ton of criteria out there. If you guys are using your charts by Tradeway stuff, I mean, the ability to put in scans and screeners and what you can screen out or what you can search for, I mean, it's an exhaustive list. So, depending on the strategy that you're using, you might be looking for something like a volume surge or a percentage move. Now, those are things that I do like to search out and find. So, almost every day I will do basically it's a price surge, a price percentage surge, and I'm looking for the stocks that have the biggest move up and down that particular day because there are certain strategies that I would use based on whether that's creating a gap or it's a big candlestick or whatever. So I find things like that helpful. I know that there are some students that do a whole lot more with the screeners and they're out there and you can even kind of search. And I don't know how well this works, but you can go out there and you can kind of search for particular strategies. And it's supposed to kind of identify those. But again, you have to input the criteria that you're looking for. So you still have to know that. But obviously, yes, there would have the higher probability of finding something that you would miss if you weren't using one of those scans or screeners. Now, the second thing I would say about that is, well, do I have to have a bunch of stocks? Could I just create a small list that I can keep up with and then just trade a small list? And what I would say to that is, well, absolutely yes. Now, most people don't really do that. They like to have a big list. They like to go what Pastor David used to call an Easter egg hunt. It's an adult Easter egg hunt. We like to go looking for certain, patterns. We like to go looking for certain setups. And so we like a big list so that we can kind of take a big list and narrow it down to a small list. And that's primarily what we do on Monday nights. We take our big list of stocks and then we narrow it down to a few stocks based on particular patterns and the clarity of those patterns and the likelihood of those patterns working, things like that. So you can do that. If you want, one of the things that you'll do too, I guess if there's a third thing, I said there's two, that's the third thing too, is that you're going to be able to assess what you're looking for, even with a bigger amount of stocks as you get more experience. So as you get more experience, you'll be able to work your way through a longer list of stocks very quickly, just because you'll be looking for certain patterns and your eyes will be drawn to saying, okay, that's what I'm looking for. That's not what I'm looking for. So you can scale that out. So again, you're not going to be able to process like a computer, but you'll be able to do some things that are equally as important as what they're doing. All right. So I would say the biggest question then is really, well, how accurate are AI stock market predictions? All right. So these include the ability to undertake functions such as data cleaning, credit scoring, and trading optimization. The bigger question is whether AI can predict the stock market reliably. At the moment, the answer is no, but it is not inconceivable that this will change. All right. So everybody kind of has this idea that, oh, if we can get computers to go out there and trade for us, then we'll be right all the time. And the data so far has proven that that's not the case. Why? Because there are still individuals making decisions. And what they found is that the computers don't have a tendency to adjust or adapt very well to conditions that they are not expecting. So, in other words, when we're in an environment where trading is up and down and up and down and up and down, particularly within a day, they're not going to respond really well to that movement. They are better suited to longer moves over time. Now, when you think about what they're processing, historical data, that makes sense. But in a lot of ways, we're kind of doing the same thing. We're using historical data to help predict future potential movement. So we obviously have the benefit as well of being able to draw in lines and things like that. But they're looking at certain things and they're trying to figure out whether or not this will work. But again, you still have to have somebody to input data as to what they're looking for. So the key here, even if you were to use AI, which by the way, most of these cost money, and some of them I looked up. One of them said it cost, about $90 a month. Okay, so now the obvious follow up to that is, well, if it costs me $90 a month to use, it better be making more than $90 a month. Otherwise, that's not worth using. So if you are trying to move into that arena and say, you know what, I want to check it out. I want to see what these things are like. I want to see if the computer beats me, then be prepared that depending on the software that you're using, and I would suspect that this is one of those things where the price does matter. When it comes to accuracy, you'll be able to do that. Now, I looked up a couple of things that they've been charting. So a couple of AI softwares they've been charting. What is the success rate of AI trading bot? It depends on the bot. Some lower risk crypto trading bots boast a 99% success rate. Well, that's amazing, right? So again, I'm not into crypto. Some of you guys might be, but 99% success rate, that's pretty amazing. While others execute higher risk strategies and have a lower success rate. The main thing most investors need to consider is whether the bot they're looking at can execute their specific investment strategy successfully. Okay, so again, it's not just like, hey, just go in and do this stuff. You got to have an idea of what you want that thing to be able to do. And then apparently there are some that execute those particular strategies better than others. Now, how you find that out, I'm guessing you're going to have to do some research and trust that whatever the company's selling you, that's what they're able to do. All right. Another one's an AI trading bot. Took a total of 7 trades on Microsoft, with 5 being winners and 2 being losers, showcasing the potential of AI in stock trading. The AI bot had an 8.5% profit trading Disney with 3 trades and 0 losses. Automated trading has serious potential for profits and may be the future of trading. Well, that's interesting. Okay. So with Disney, made 3 trades, 0 losses, but had an 8.5% profit. So what are we defining as a win here, right? So, I mean, 8.5% profit, that doesn't sound like it's really winning big. Now, I can go out here and get a CD for 5.5%. The AI bot was at 8.5%. So the AI bot is outperforming a CD at this time, but by about 3%. Okay. So I think some of this may boil down to, again, just asking yourself, saying, okay, well, that's pretty impressive. The other one said that they got 5 right and 2 that were expenses. But again, the thing I would say is, in questioning these results, is what are you calling a win? So in other words, like last night we did our Monday night study groups. I suspect that with the market up today, we talked a lot of times last night about how I was surprised there were so many bullish trades out there And I kind of thought, well, the market might move up, but then it should hit the EMAs on top and then fall. It was kind of weird to see so many bullish trades, but there were some of those that were really good setups. Well, what if this morning some of those popped up and they worked really well? Then they hit the EMAs on top and they began to fall. Do I call that a win? Or if I end up selling at a lower price, obviously that's got to be a loss. But if it moved up, say let's $1, and then it ends up falling, is that a win or not? So I think one of the things you have to do too is not just simply look at the results, but to understand, well, what were the criteria to determine if this thing was a win? So you got 5 wins, but what did that mean? You got 3 wins, but you made 8.5%. So what were we really doing here? You're making 3% on a trade. How long was the trade? Those kind of things. So I think there's more research that would need to be done to even determine what these results are really telling us. And I don't want to kind of be out there going, Geoffrey, you're really trying to just pull strings here or whatever, or make a big deal out of this. And what I'm saying is, no, we have to evaluate all kinds of research. People research things all the time, and they have a sway, right? This idea that they want to see certain outcomes. So again, we have to be aware of that and say, okay, what's the reality? What were the steps that went into determining what is a win, what is a loss? How did you get out of that trade? When did you get out of that trade? Did it eventually turn around? Did you stop out at this percent? So I think there's a lot that would go into that in determining whether or not we would consider that profit or an expense, and then to what level that expense was. It just said they went 5 and 2, but what does that mean? Did they end up with big expenses? Did they have small wins? Did they have big wins? So there's more to it than just saying they got 5 right and 2 wrong. Are AI trading bots profitable? It depends. It depends on stock and market conditions, chosen strategy, and algorithm type. A bot could make a 2% return for a day, and then the market will change its direction and it will blow up that day's profit and make a 3% loss. So this thing is saying, it's a op-ed piece. It's saying that programmers should care about risk management. So obviously programmers should care about risk management, but we should care about risk management, and we do. So it may not be as simple as just saying, hey, a robot is going to outperform me, but maybe it will. So we have to evaluate the parameters. We have to look at the strategy. We have to think about the data that's been given to that individual bot and what it has been programmed to do, because that's what it's capable of doing. You as an individual created by God have incredible opportunities. And the brain that we have is an amazing function. The ability that we have to chart stock, to understand movement over time, to draw lines, to understand movement off of EMAs, to understand human condition and human nature and how people tend to respond in certain situations. There are certain advantages that we as an individual have still over the robots. And so it's a fascinating discussion. It is certainly something that will become a bigger deal over time. So let's be aware of that, but then let's go out there and say, okay, so what is it the bot does well to get the results they want? Is there anything that I can go out there and say, well, maybe as an individual, I can do those types of things better, maybe on a smaller scale, but better? Or can I take advantage of some of these things like scans and screeners that would help notify me of particular stock I may not be watching at this time, but because I can use some of the tools available to me, would make me aware of certain potential trading opportunities, and I can go ahead and take advantage of that as a person. Well, guys, those are some of my thoughts about AI and its role in trading. And, things may change somewhere down the years. We may see a significant uptick in what they're able to do. But for now, know that it's out there. Know that people are using that. If you want to try it, you are certainly welcome to do so. But make sure that you're aware of the parameters, which means there are certain limitations to what it can do. That's going to be determined by strategy and the programmer and the data that's been given. And you as an individual have amazing upside, and you have the ability to tune into us and get more insight as to what we're seeing and what we're able to do. And then we have the ability to work as a community to go out there and help each other achieve our goals. So thanks for being with us today for Tip Tuesday. We'll see you guys next time.